afternoon, and welcome to Achievers Financial Education Platform. And I'm glad to have you welcome back with us. I am Anitra Harrington, and this is Fabian Sinas joining us today. And I am so happy to have you guys with us. We are on all social media platforms, which is on YouTube, on Facebook, and on Instagram. So please join us on whichever platform you feel comfortable, because we are live always on those platforms on Thursday at 5 o'clock. And if you're not able to join us, it's always recorded, so you can go back and watch us to make sure you can catch up on some of the episodes that we may reference, so that you can be able to hear some of the nuggets that we refer to, so you can get your financial things caught up and get to hear some of the things that we've talked about previously. So we had a previous episode that we talked about insurance and the history of it that was aired just a few as well, so you'll be able to hear about some of the things that we talked about. So today we're going to talk about some things of that goes over the funny banking of how how life insurance works. And I have Fabian here joining me today that we're going to talk about how wonderful we're going to hear how some things may be referenced on how if we were to take and have our bank and they were to send her a letter, and how some things may go over with it. And this is going to be quite a dynamic thing that we're going to talk about. So we're going to see how it'll apply. And you guys, please put some comments down so we can really understand if you guys were to take and have this to happen to you, and you were to receive a letter that came to your household and you had to sign off on it. Tell me, what would you do if they were to tell you these things? So I would really love to hear. So Fabian, please make sure you take and help us to thank you for joining with me today.
Yes, I'm glad to be here, Anitra. Like you said, my name is Fabienne.
So thank you. So we're going to play a game, so you can understand how cash value, which is also like whole life, really works for us, okay? So we talked about that. So if you don't know what we were talking about, like I said, go back and watch the previous episode. You can go and see on our link that we have on our platform that you can click on and see how it goes. Okay, so Fabian, what bank do you use?
X, Y, and Z.
Okay, so like I said, that's the bank, so we're going to go over. And let's say they sent you a letter in the mail you received at home, right? And so you go to your mailbox, you take this letter out, and you read it. Right? And you see that your bank XYZ sent you this letter, and they said you have 5 new rules, right? 5 new rules that your bank account has told you that you have to comply with. And you have to do this and read it and then sign it and then send it back, right? So we get these kind of things sometimes that come in the mail from different places, and we have to send it back that has updated it, right? So then Bank XYZ will implement these new rules to your bank account once these things have applied. So that makes sense to you, right?
Right.
Okay. So everything's pretty straightforward how this is laid out. So this bank says to you, and your letter says, okay, so, and I know how some of us get about our bank accounts. This is more precious sometimes than our kids or our house or our spouses sometimes, because you talk about money, you don't play with that, right? Okay, so imagine, they tells you this is rule number 1. All your new deposits, right? You work hard for this money, right? You work this job 8, 10, 12 hours, sometimes overtime that you done did. And you have all your deposits that you will have a zero balance for the next 2 to 3 years, right?
This is not real.
What would you say to this, right? You probably throw that letter and start ripping it up or whatever, right? What would you say if they told you this is the first rule on that paper? You probably say some colorful adjectives with some F-bombs or something. Right?
Like, I'm out of here.
You can't be serious.
Yeah.
Right? And you're like, I'm going to another bank. They
To another bank, yeah.
Okay. All right. So, and then if you stick around, you say, okay, let me entertain this and see what they're going to say, right? Okay. So now rule number 2. They will pay you. This is going to be, in contingent to this. After these 2 to 3 years, they will pay you 1 to 4% interest from them on the money that you start to accrue after those 2 to 3 years have passed. So they've been keeping your money So you have $100 going in there every month after 3 years. So let's say $3,600 you done donated to them, right? $3,600, $3,600 you done gave them, and now after that they say, okay, now you can start to accrue interest on this money.
After 3 years.
After 3 years, so $3,600 you done gave them, and now they hold it. They keeping that money, and now they told you we're gonna give you interest on the money that you have. That's better than most banks. You get 1 to 4% interest, but you had to donate that $3,600 to them first.
I could choose the charity of my choice. I don't need to.
Okay, so that's rule number 2. Okay, so then rule number 3, it says that if you need any money, right? Need it. Like needs means like I need to fix something. Your car breaks down. I need to pay like a down payment because we live in Florida and you need to move, or you have to go and help somebody for something, whatever it is, right? You need this money. The only way you can get that money out of that bank account, right? So let's say you had $3,600 that accrued in that account. The only way you can get the money out of the bank account is that if you borrowed it.
My own money?
Your own money.
Okay.
That you only can get it out if you borrowed it. And they would tell you that you have to borrow it at an interest of 5 to 8% interest.
I would not sign it.
So this is what they're telling you. They're like, no, Fabian, like we'll give you the money, but you can't take all of it. You can take some of it, but you have to pay us 5 to 8%. So what does borrow imply?
Interest.
No, but what does borrow imply? If I told you you're going to borrow some money from me, what does that mean?
I have to pay you back.
Right. So you got to pay me back plus interest. Okay.
Oh, no.
Okay, so that's rule number 3, right? So how do you like this is, these rules that they've implemented so far? That I want to make sure you understand what I'm telling you. So we're going to keep your money for the first 2 to 3 years. So them $3,600, you fattening up the bank's pocket, right? And then you're going to pay them interest. They'll pay you interest, but you had to first fatten up my pocket, the bank. I'm your bank, okay? We're pretending. And then you probably want to choke me if that was the case, right? And then if you need the money, I'm like, you're going to have to, it's kind of like back in the days of what they call it, like the mafia in a way, like you're going to have to pay me interest if you don't pay me back the money if you want to borrow it. How do you like that?
Nothing about this will work for me.
That would be like somebody's probably
that's a ripped off.
They'd probably be very upset and like cursing and whatnot. Okay. So rule number 4, we're on rule number 4, right? So rule number 4 is that in the event that you need a large sum of money from the bank account that you have, we reserve the right to take and decide there's a 6-month waiting period. So you might say, oh my God, my car broke down. I need to fix my transmission. And that $3,600 is going to fix my transmission. I need to get it fixed. And I need it now because, in Miami, you can't really get around. So you need, to fix it, right?
Yes.
But we're going to say, wait, hold on. Wait. We can take up to 6 months to decide if we want to give you that money out of your account. How would you like that?
There's nothing about this to be like.
You'd be screaming.
Yes, I know on top of my lungs.
I know you're a reserved person, but you'd probably be screaming some Creole and English in between, telling them what kind of foolishness are you talking about, right?
Yes,
like,
exactly.
are you kidding me? Like, this is not real.
This is not real.
Like, you be on the phone talking about, what? Is this illegal? You can't do this. But these are the rules that they're asking you to sign off on. And then, okay, so this is rule number 5, right? We're getting to number 5. This is getting good, right? So and I know you probably think I'm entertaining you, but these are these rules that I just talked about. So rule number 5 is that when you die, you know how when someone dies, the family has this whole thing. They start fighting and saying, no, I get the money. No, you get the money. No, I don't want that to happen. So what we don't want to happen is as this bank, XYZ. So when you die, the bank is just going to say, you know what, don't worry about it. We're just going to keep all the money. You ain't got to worry about you guys fighting over it. We're just going to keep it all. How would you like that? So after all this time, most people keep the life insurance, or this bank has it for that whole time period. So let's say you had a good $20,000 that was in that account that had accrued over time, that had been put in there. And, person dies, and now there's 20 grand that's in there. Don't worry about it. Y'all don't have to worry. We're going to give you the check for, the money, but we're going to keep that other 20 that's going to keep in our pocket so you guys don't have to fight about it.
This is unreal. This is not real.
Is that crazy or what?
That's crazy.
And people are thinking, this has got to be made up. Like, this is no way is possible, right? And I know you guys are probably laughing at home saying, she is just crazy. How could she be even talking like this? This does make absolutely no sense.
No sense.
But this is the truth. And this is part that why we sit here and tell you these things today, because I know it might be entertaining you, but this is the truth of why this is why I signed up to do this. Because if you were to have to sign off on this document, there is a document that you guys actually signed if you actually did do this. So from this bank account paper, you're going to sign off and say that you're going to have a zero balance for the next 2 to 3 years. You're going to take and have a 1 to 4% rate of return. And you're going to, anytime you decide that you want to take the money out, you have to take a loan out. And it's going to be 5 to 8% interest. And that if you do decide to take any money out, there is going to be a 6-month waiting period, up to 6 months, to get the large sum of money. And you can't take out all of it. There's no way. So, and you think about saying, well, if you want to take the savings, that we're going to keep it when you die. And here, sign at the bottom line of this paper so we can implement these rules on your bank account.
I'll just rip it off and then thank you, but no thank you.
So anybody who has cash value life insurance that they advertise, a lot of times people don't realize that's what you signed off on. And that is the truth. It's written in there. You probably don't realize it is in the 8 pages of that policy that you signed off on. And a lot of people don't say, I didn't know that. Yeah, that's why we're here. And that's the reason why we do what we do, because we like to educate you guys so you understand that this is a part of what you signed up on. That's that five rules that we're talking about. It's buried in there, but it's written on those lines that we just talked about.
Yeah.
And how does that make you feel?
Bad. I would never sign for something like this if they explain it
like that. But they don't tell you that.
They don't tell you all that.
Most people will never be told, excuse me, straight up just like that. They're going to tell you, sure, you have a savings account. And yes, you can take the money out whenever you like. And yes, you have the money, you have, money that you can take out whenever you like. But at the end of it, they don't realize that there is a savings that you'll never have. Because nobody's going to tell you that. They'll just tell you, yeah, there's a savings that's attached to this life insurance that you have, but you're never going to get it, regardless if you want it or not. Or if you do decide to get it, you have to cancel the life insurance policy part of it. And there's a fee that they're going to charge you if you do. But nobody tells you those things because you're not educated enough to understand it. And that's why we're here, to make sure you get to know those things. And that's why I said, if you would like to learn more, or you want to have someone like us to sit down with you, call the number that's listed on there, and we can reach out to you to help you to understand more. But that's why we're here, to take and let you understand, there's a lot of things that if you don't know anything, you're not going to take and do the right thing. So that's why it's like, if you get in trouble, well, who do you call? A lawyer, right?
Yes.
And if you get sick, you don't go to the mechanic, right?
No, you go to the hospital or to the clinic.
Right, or to a doctor, right? To make sure you get taken care of.
Yeah.
And the same thing applies to anything else. If it comes down to a financial matter, you find somebody who takes care of finance, or if it's life insurance, you find somebody who knows about life insurance or other things of that nature. So that's why we like to make sure you understand different concepts, and that's why we're here to educate you on different little pieces to help you to understand how things are broken down on. Because a lot of people are not going to give you the nitty-gritty and educate you to know how things are actually set up and let you understand what's the difference between the two. They're just sell you what's probably better for their pocket versus what may be available and more affordable and other options that there are. So, Fabian, you gonna sign this letter so we can send it back to XYZ?
No, we could rip it and throw it in the trash.
So I'm glad that you understand this, and I'm glad for you viewers that we are here to share this information with you. Please join us next time so we can help you to understand some other concepts and things of that nature. And if you have anything else that you would like to understand, please make sure you put it on our page so we can actually go over those things with you and follow up with you. We have our number listed on there as well, so if you want to reach out to one of us, they'll make sure they set up and contact us also. So we have our business number listed. So thank you for joining us, and again, we'll follow up with you next week on Thursday and see you again. So thank you.
Thank you for watching. Bye.
Bye.
Let's go to Kelly in Missouri. You are on the Susie Orman Show.
Hi, Susie.
Hi, Kelly. What's up?
About 12 years ago, me and my husband purchased a universal life insurance policy to help pay for my son who's going to college in 2 years. And I'm concerned about the amount that we contribute every month and if we're going to have enough to pay for school. And also, was it a good investment since it's not an insured account?
How long have you been watching the Susie Orman Show?
A while.
A while, and how many times? How many times have you heard me say I hate universal life in the majority of the cases?
Yes.
A lot. All right. Let's just let the numbers speak for themselves, girlfriend. Okay? You put in how much per month?
Total $463.
A month?
Yes.
All right, so just let's say it's $400 a month. We'll make it easy for the math. That's $4,800 a year, correct?
Yes.
So over 10 years, that's $48,000. How long have you been doing this for?
Probably about 12 years.
So $58,000. Let's just say $60,000 in there. You put $60,000 in there. What is the cash value of the policy today? Not the accumulated value, the cash value when you start to withdraw it.
About $40,000.
All right. Is that a good investment? You put in $60,000 and you're going to take it out. You have $40,000. You have lost $20,000. And really, that was, you put in $60,000 with no interest whatsoever, so to speak. So was it a good investment? It was a horrific investment. I'm going to say this once. I'm going to say it for the rest of my life. Here's what you have to get. Insurance needs to be insurance. Investments need to be investments. You should never combine the two, ever, ever, ever. With that said, you are far better off at this point in time now taking the money, paying for your son's college education, and stopping the policy really at this point in time and taking that, $460 some odd dollars a month every month and putting it right towards his college education. Now that he's older, there's not a lot of catch up to be, but that could have been at least probably $100,000 if we had done it correctly. Just so you know. I just have to address Kelly's call that she just said for 12 years she's been putting money into this universal life insurance policy. Really, she should have $80,000, $100,000 in there, and she has, what, 40. Here's what I want you to understand. Do you think when I sit here and I'm talking about how in most cases I don't like universal, variable, or whole life insurance that I'm not talking to you? I am talking to you, but you don't have to believe me. just do me a favor. If you have one of those policies and you purchased one of those policies as an investment, it's a great way to invest your money as well as provide yourself with insurance. Don't take my word for it. Get out your paperwork. Look at how much money you have invested. And do me a favor. Go to one of those compound calculators that happen to be online and start with, you put in $460 a month, and you did so every single month for 12 years. Even at just 4%, what would that be? That'd be like $85,000. So do your own numbers and then take a look at what your cash value is, not the accumulated value, because that means nothing. What would you get if you cashed it out? And you will see that you have probably 50% less than you should have had if you just invested that money at a simple 4% annual average rate of return, which isn't that great. People got it? So can you just really check it out and stop wasting money?